So being in the industry as long as I have, over 20 years, I have seen so many times clients run into huge mistakes when they take money out of their retirement accounts and or when they change jobs. So all too often you're working at a job. We see this more and more with the younger folks that are in the workforce. They're working at a job, they've been there 3-4 years, they built up X amount of dollars in their 401k, and then they transfer over to another job that also has a 401k plan. But in the process of leaving one job and going to the other job, they cash out their 401k and then decide to deposit it into their new job's 401k. That whole process becomes a taxable event. So right away, you're hit with a 10% penalty if you're under the age of 59 and a half, and you have to pay taxes on that money. A lot of times people think that when they make with early withdrawals from their 401k or their retirement funds, the bank or whoever's holding those funds for you, whether it's Prudential, Fidelity, they'll charge 20% taxes. And a lot of times they tell you that the taxes have already been taken out. This is so far from the truth. What happens is you get hit with a 10% penalty, and then they charge you the lowest tax bracket, which is 10%. That's where the 20% comes from. Now, when you come into our offices and you file your tax return, guess what happens? They take all of your current income plus your retirement income, put it together, and the odds are you're no longer in that 10% tax bracket. You're in a higher tax bracket. So there's a lot of times where we're the giver of bad news. We're the bearer of bad news because unfortunately you were ill-informed, that the client was ill-advised, and unfortunately they still have to pay additional taxes on that retirement account. So very important, if you're changing from job to job, do not cash out the 401k or the retirement plan, the pension, do not take it. Wait until you become eligible on the new job. Sometimes you got to be vested 30 days, 60 days, 90 days. Then when you become eligible to have that money put into a 401k plan, then do a rollover. You'll never come into possession of the funds. It goes from trustee to trustee, account manager to account manager, from Prudential to Fidelity or whoever's managing the account. Those funds never come into your possession, into your account, and it's a 100% tax-free rollover.